Hello, everyone. I'm Rob Young, founder of Blue Dot Wealth Management. Welcome to 2024. As we move into the new year, there seem to be clouds on the horizon. Every so often, the sun peeks out and the markets rally, only for the clouds to roll in again. Is it going to rain? Are we going to have a recession? Or will the sun come out and lead to a soft landing? We feel it's best to pack for either occasion. The big things we are watching are interest rates, the consumer and corporate earnings, and inflation. Each of these are tied together, and much like this past year, progress will feel slow. Let's start with interest rates and inflation, since the targets for those two data points are guided by Federal Reserve policy. The consensus view is that the Fed is done raising interest rates. It seems that both Wall Street and the Fed agree on that. However, Jerome Powell's concern is lowering rates too fast will cause a spike in inflation again. For those of you old enough to remember the 1970s, this led to stagflation, a period of no growth and rising prices. This is why the Fed keeps saying that rates are likely to stay higher for longer. So while there has been recent commentary stating that there could be 3 interest rate cuts in 2024, the Fed is trying to remind us that this will be data dependent. Should the economy show no signs of slowing, or if there is a stall in the inflation data, the Fed could keep rates where they are for most, if not all, of 2024. Overall, the Fed is committed to their 2% inflation target, something that most of you have heard. Their logic is pretty simple. They want price stability. They feel that predictable prices leads to happy consumers. While this sounds good, what they are not expecting or attempting to engineer is a period of disinflation, driving prices back down to a pre-COVID level. We should expect the cost of most goods to stay in the ballpark that they currently are for the foreseeable future. We still have a supply and demand imbalance in housing, which most economists expect to persist. While supply chains have largely recovered from the dislocations caused by COVID-19, wages and the expense of raw materials, coupled with a retreat from globalization, will keep prices higher and make the Fed's job in achieving that 2% inflation target difficult. Looking at the consumer, all of the data out there gives us a mixed view. Is the consumer running out of money? What about consumer debt? While these are great questions, much of it is noise and seems, at least to me, to miss the larger point. People tend to spend as long as they have a job. Unemployment continues to remain low, below 4%. And this year, we expect large companies to allow people to retire early or lay people off, to right-size their staff and bring employees back into the office. When people are laid off, however, they are still being absorbed into the workforce. Small business formation coming out of COVID-19 has increased dramatically over what it was in 2018 and 2019. A study released by the Brookings Institute in late September of 2023 showed new business growth is at its highest in over 20 years. Those new companies have been the beneficiary of corporate layoffs over the last few years. If layoffs were to accelerate to a point that job seekers could not be absorbed into the economy, our view on the consumer would naturally change. And that leads us back to being unsure as to whether we should pack a raincoat and an umbrella or wear shorts and a t-shirt. Again, we feel it's a good idea to be prepared either way. In part 2, we'll dive a bit more into some specifics about the market and the economy, and the thing that will be on all of our minds in a few months from now, the 2024 election. In case you don't watch that video, I'll give you our quick forecast. We think there's about a 75% chance of sunshine, but that also means there's about a 25% chance of rain. We're going to help you be prepared no matter which way the weather takes us. But remember, the longer-term picture is good for all the reasons that we've talked about before. Younger people continue to get married, buy houses, and start families. Baby boomers continue to move toward retirement and are focused on their next act. The spirit of entrepreneurism is alive and well. Keep your eyes on the horizon. There will be clearer skies ahead. Thank you.